Hello guys, here is another in-depth lesson on CRT. So in this particular video, I'm going to be simplifying the concept of CRT to you in just a couple of minutes, right? So because I'm going to be going straight to the point to answer so many questions that I got from the last video that I made, that which candle should you take as, or which candle should you choose to be your CRT candle? Which time frame should you take your candle to be that the CRT candle? So there are lots of questions came in. I'm going to be answering them in this particular video, and I'm going to make it to be very short. All right, so I already made a video on the concept and the basics of CRT, which let's just do a quick review of that. So CRT simply stands for candle range theory. All right, and this concept states that every candle that you see is simply a range. All right, every candle that you see is simply a range. So which means that if you see a candle like this one, let me draw that clearly. So which means every candle is a range, right? So which means that if we see a candle like this simply means we might have a couple of candles like this on the lower time frame, right? So which means this is the high, all right, and then this is the low of the candle. So if we have a candle like this is a range on a much lower time frame. All right, and the concept of CRT simply states that when we have this type of a candle, all right, or when we have a candle that this is the high of the candle and then this is the low of the candle, according to CRT concept, states that as this is a range on a much lower time frame, we believe that price is going to poach the high of the CRT candle, and then it definitely comes back to take the low of the CRT candle. All right, so price is going to turtle soup the high, all right, or it can be vice versa. It can turtle soup the low and then it goes the opposite direction to turtle soup the high in the next candle, which means that we're going to have something like this. All right, for the next candle, let's say this was a bullish candle, and then the next one is going to be a bearish candle, and then maybe we'll open like this, and then price takes the high of this candle. Once it takes the high of this candle and closes bearish, then we expect the second, third candle to then move lower to take the low of the candle, as which is our CRT candle. So if you're on the daily time frame and you choose your CRT candle, simply going down to a lower time frame, this CRT candle is going to be a complete range of price. All right, it's going to be a complete price leg or price range on a much lower time frame, because this is a daily time frame, which means going down to a lower time frame, you're going to be having a lot of 15-minute candles within this candle, so which is going now to be a range on your lower time frame. All right, this is simply what it means by CRT. That is simply the concept. It's based on a candle being a range, like every candle is a range. But now the most important thing for you to know is which candle are you going to choose to be your range candle. All right, which candle are you going to take to be your range candle? Because if you go to the chart and you're selecting this candle to be a range candle, once price takes the high of the candle, price did not take the low, and price keeps moving up. Right now, if you take this one, price took the high but did not take the low. All right, if you want to take this one, price took the low but kept going down. So you have to know the candle you are selecting as your range. All right, you have to know the candle, which candle and where precisely at the time before you select your CRT candle. That's the most important thing when it comes to trading this particular concept. It's quite a simple concept, but you have to put so many things together before you make it to be really successful or to be profitable. Right now, as we all know already, every candle is a range, but now there are factors that we have to put in place before we are able to select that particular candle. Right now, most of the time I'll prefer long body or long range candles, which means that if I can, these are the type of candles that are mostly to be like your range candles. Right, you can have a candle that is like this, or you can also still have a candle that is like a doji, but it has a wider range. This, from my back testing, are shown to be more effective, right, than small tight range candles like this. All right, because what, this will be a very tight range, and for you having a trade here, you will likely not have a good risk to reward ratio. Right, so which means if price should come up to take the high of this candle, all right, and then you get your trade somewhere around here for price to come lower to take the low of the range, you might be getting like a 1-to-1 trade or 1:1.5, which will not be very good. Right, maybe depends on your accuracy as well. Right, so I'll prefer candles with bigger range, like they have a wider range, so that if you get your trade above when price takes the high, all right, when price total the high, and then you get your entry, you're going to have a good risk to reward ratio for price to come and take the low, right? So let's quickly go to look for some examples. What are these things that we have to put together before you determine a good CRT candle? All right, what are these things you have to put together before you determine a good CRT candle? So now the first thing is your higher time frame. Whether whatsoever strategy you are trading, you need your higher time frame, right? So first rule is that your higher time frame must be in line with what you are trying to look for as your CRT or any strategy you are trading at all. So you need to first of all know where the higher time frame is going. If you don't know where the higher time frame is going, you will likely be looking for CRT in the wrong direction. You will be looking at the CRT in the wrong direction. Like for example, price, if you did not know that prices was moving higher, you will select this candle thinking, all right, price took the high, you should start looking for sales, and the price keeps going up. You need to know where the higher time frame is heading. All right, so which means that most of your analysis have to, first of all, you have to settle this higher time frame first. All right, now in this higher time frame, you are going to be looking for what? The first, you are going to be looking for direction. You are going to be looking for direction. All right, and then the second thing you are going to be looking for your key level. These are the most important things that you need to find out on your higher time frame. First, direction, where is price going, or the key level. All right, if price is on a key level, that's where you'll be looking for your CRT on that higher time frame. You don't look at your CRT on the lower time frame, because if you're looking at the CRT on the lower time frame, let's say for example you are looking at the 5 minute or 15-minute candle to be a CRT, this candle might just be like 4 or 5 pips, it might be 10 pips if it is on the lower time frame. Which means if you want to take a trade on this lower time frame, if price touches the high of this, right, and then you get your entry somewhere here, you will be like you're taking a trade that's going to give you like 4 pips. All right, so your CRT is not on lower time frames. You don't take CRT based on lower time frames. All right, so which means that first and foremost, our higher time frame is where we're going to settle all the scores. First, the direction, and then the second thing should be your key level. All right, now where is price going to? That's the first thing you need to know. If you know the direction where price is going, then you now expect a total slope opposite to that direction, right? Like I used to give this explanation to most of you that, okay, if the institutions wants to buy, since they need a lot of liquidity, what they will need to do is, if they want to push prices higher, right, let's say they want to push prices up to this point and prices around this area, what they normally do is they have to get liquidity. They have to look for people that will sell to them so that they'll be able to buy, right? Because they cannot just be the ones participating. They need sellers so that they can buy from them. So what they will do is they'll total swap, all right, in the opposite direction of that particular the move they want to take, so that people will start selling and then they buy from them at that point and they push prices to where they intend to, right? So it is simple. So this simple analogy can be AMD, power of 3, and so on, which simply means that the market is always going to total swap in the opposite direction of the real trend. All right, so if you know where price is going, you expect a total swap in the opposite direction. That's the first thing. All right, so now on the higher time frame, we have to identify what direction. We have to identify direction, and we have to identify our key level. Now on your key level, it can be an order block. All right, on your key level, you can be having an OB, you can be having a fair value gap as well, all right, or a volume gap, or an old high or an old low that price has touched, right? Their direction, simply where is price being drawn to, it can be drawn to an old high if it comes to external range liquidity, an old high, old low, or internal range liquidity in the form of fair value gaps and other blocks. So these two, they're actually interconnected, right? Like key level and your direction. So now this is the first thing we want to identify. We identify our key level on the higher time frame, and also then we identify a particular candle, a long range candle leading into that particular key level. Do you understand now? So you need to identify your key level. This is our key level now on the higher time frame. Then we want to see price. Let me do that clearly. Let me make that to be very clear. So we have what? We have our key level. All right, this is our key level on the higher time frame, and now we are watching price coming into this zone on the higher time frame. All right, these are higher time frame candles. Then we want to see a higher time frame candle, all right, come into this zone with at least with a bigger range. That's just what I'm trying to say. We need a bigger range candle to come into this key level. Now, once we identify this big range candle coming into this zone, all we need to do now is we identify the high of the candle and the low of the candle. Now, the first thing, we have identified our key level, so which means that we're actually expecting price to sell from this particular level, right? So now we are expecting price to sell from here. So this candle, we identify it to be our CRT candle, which means we want to see price touch the high of this candle, and then we target the low of the candle, because remember, this candle alone is going to be a complete range on the lower time frame. Keep that in mind. Keep that in mind. This single candle here is going to be like this on the lower time frame. All right, this is the opening, this is the low, this is the high, and then this is the close. This is how it's going to look like on the lower time frame. Now, what we want to see is the next candle should open, all right, and then trade something like this, touch the high of that candle, and then does what gives us some entries, and then we target the low of that candle. This is all about CRT. This is the simplest explanation I can give you, I can expect you to understand when it comes to CRT, right? First, a candle on your key level. That's the most important thing. You expect a total soup of a candle on your key level. So you identify a good range candle in your key level, right? And once price touches the high, you need the confirmation to sell. So most of the time, the confirmation you get is that the next candle, once the next candle touches that particular high, all right, so when the next candle comes into this, it takes, let's say it's going to be a bearish candle, it takes the high of this candle and then it closes bearish. This is now the second confirmation. This is a double confirmation. Sometimes it might take the high and then just go right down to take the low, right? So which means that you have to be watchful the moment it takes the high and it gives you some kind of confirmations. You can actually start selling if you see the total so valid. All right, so if it doesn't, then the next day price can then continue lower to then we target, which means the next day here you are going to be targeting the CRT candle low. Remember, this our CRT is a candle happening on a key level, right? So this is very, very important. You were not trading, you did not take this one to be a CRT. Why? There was no key level here. So which means the moment price takes the high, you were not selling because price was supposed to keep going higher. All right, so it must be on a key level. So which means if you have problems identifying your key levels, I think I've made a lot of lessons on that. You should work on identifying valid key levels so that once price gets into that key level, you will know what to expect exactly, right? So let's quickly go into the charts. Let me show you an example on Euro USD so that I don't make this video long. It wasn't my intention. So now let's look at Euro USD. This is Euro USD, and then if you could see at this point, we'll see that price is dropping down, right? So first and foremost, we want to find out, is this a key level? All right, is this a key level? Why? Because we did not take any of this to be our CRT candles, right? All this. So we are still to find out, do we have a key level here, so that we then see if if we should be expecting a CRT. All right, so now just looking at the daily time frame here, all right, we notice that something happened here, very, very important. Price took an old high here. Okay, we had price taking this old high, and then also if we look back, we'll see that we had a balanced price range. We had a fair value gap here that was violated, right? This fair value gap here, and even this is another one. So this kind of like a key level. All right, this is the key level for price. After pushing this high, we can then expect maybe a pullback for the way price has actually been expanding, right? Maybe to come back now for internal range liquidity before we continue higher to then grab this sell buy side liquidity. Now from here, I also saw something on the 8 hours time frame, which was also very, very important. All right, so let's go deeper to that, and then we'll try to see. All we are trying to do is trying to find out a key level, right? We are trying to find out on a higher time frame which key level we have. Now look at this particular candle here. This is a very, very interesting order block candle here, right? So which means this candle right here is our order block. So we're having a key level. 8 hours is still a higher time frame, right? So we have our key level at that moment. You also have even a small fair value gap here. So this is a very good key level that we can say we can expect at least a correction from it, right? After price took out this old high here. So let's go back and then we'll see how price reacted to this key level. So price came into this key level. What did I say? We will look at the candle with a wider range, right? So we saw this candle came in right into the key level. You can see the range is quite big, right? So even if from the daily time frame, we also had that very interesting candle, this candle purging in to our key level with a very good range. Now first and foremost, we mark the high of the candle. All right, so this is the high of this candle. We mark it to the right, and then we say that's our CRT candle, right? So it's our CRT high. That's our CRT high. Then now we also have to mark the low of the candle to be our CRT low. All right, so that's the candle we have selected to be our CRT candle. Why? Because it has a wider range and it's the candle that tapped into our key level. So we have the CRT low, we have the CRT high. So I'm already doing this on hindsight so that it will not bother so many of you, so that you can see it clearly. This is the best way to backtest while you're seeing it actually play now, right? So now what happens here is that price took the high of our CRT. All right, let me even see. Let's try to. So price took, remember from this point, right? What you want to see next is price should touch the high of your CRT. That's one thing, right? So here we saw price took the high of our CRT. So which at this point, we should start looking for selling opportunities to then target the CRT low. Now you will say that, okay, this is another block, but now you need to know where this other block is sitting. It is actually sitting at a very technical area. Price could still support from here to move higher, but at this point, it is also standing against a higher time frame key level. And the price has actually been expanding for a long time. All right, so which means I was actually expecting price to come down, fill this fair value gap. So I see this other block to be a fake one, right? So which is going to likely be violated, and it can become now a breaker block for price to continue lower. Okay, now we have seen price touch the high of the CRT and has closed lower. That's another confirmation, right? So that's a total soap. And also we know that Euro USD is also correlated with the dollar, right? So this particular day, price took the high of our CRT. At this point, we're trying to look for sales so that price should to target the low of our CRT, right? So at this point, we also saw price creating some equal lows at this level. All right, this was yesterday. Price created some equal lows here, and also this was an accumulation. So prices now, this is also a sign. Remember I mentioned if the institutions want to sell, they are going to make people to start buying so that they can start buying, selling, so that they can sell to them, right? So we had price accumulating, and then price started displacing to the upside. Now at this point, a lot of people start expecting buying opportunities from here. All right, and actually if you're expecting a buy from here, you are not quite wrong, but the whole scenario now is not favoring buy orders again. Now why did I say so? Because if we look at the dollar index, all right, let's go to the dollar index 2 on the 1 hour time frame. You're going to notice something that happened. Now this is also the same accumulation on the dollar index right here. This is the same accumulation on the dollar index, and if you notice, you'll see that the dollar index dropped as much as taking the previous candle's low. All right, and what happened to euro? Euro failed to take that candle's high. So what does that mean? It means we are having an SMT divergence, which means euro is weaker, right, and dollar is just giving us a stop hunt. I've made a very in-depth video on SMT. You should check that out. Right, so now we have euro has created an SMT. This alone shows that price is not likely going to be respecting this other block here. All right, so this was your order block, but price is not going to respect it because we're having an SMT which shows euro is much weaker to continue down, and this also validates our CRT. Remember, price has already taken the high of our CRT, and what we're expecting now is for price to come take the low of that particular CRT. And also we have found SMT divergence, double confirmation, and also we are now seeing something like an AMD because price accumulated here and then it left us with very tight equal lows at this point, right? So which means we are also expecting price to come down and clear this equal lows. So first and foremost, if you are trading this order block with this equal lows, that's not a valid, it's not that valid, or it's not high probability, because price will likely want to clear this and even rebalance all this inefficiency down here. So at this point in time, we expect price to do something like this. All right, we expect price to at least react a little maybe from the other block and then go straight down to the CRT candle. So I wanted to show you with this on the euro, on the dollar, which we had the CRT, right? I mean, which we had the SMT. So now let's go back to this particular pair. Now at this point, you cannot just sell immediately because you don't have any confirmations yet. You don't know if price wants to keep going higher or if price is going to react to this other block and keep going higher. So you need confirmation, which means that for price to continue selling, we need to see this other block fail to respect price. All right, we want to see this other block being violated, right? So that we know that, okay, price is violating bullish PDRS, and then that should mean price wants to continue lower, right? So and at this point, price violated this order block right here. So what does this tell you? That price is likely going to be going down, and at this point, this was about London kill zone, right? This was, I mean, London open kill zone, pre-London, right? So remember, it is also based on timing. You have to be timing your entries. If you're trading London, you need to know the particular times you get to be getting a manipulation. This manipulation happened during Asian session, and then we had this long distribution again still during Asia, getting into pre-London, right? So we are expecting a displacement during London session to then come take the low of the CRT. Remember, this is already a confirmation. This is our AMD right here. All right, this is our AMD, and then price manipulated higher but failed to continue, giving us an SMT divergence. All right, and then came down, gave us a break of structure here, also violating this other block. So which means at this point we can take our entry the moment price comes back to this other block, because this was a very good order block. You could see the displacement was good with a fair value gap, and price actually broke structure here, closed above it. That was a very valid order block, but scenarios surrounding it were not very valid. So now we have already identified first in our CRT candle. So now we are looking for an entry, right? So we have seen this other block which failed to hold, and at this point we are then looking at this breaker now. So this other block now is now a breaker block. Why? Because it took this high, all right, before coming back down to break this low. And also within this particular breaker, we also have a fair value gap. So if you want a more precise entry, you could be looking at that fair value gap, but entering directly from the breaker here is still very valid. So which means we're selling and our stops are above the breaker. You can also include this fair value gap, just so that if price wants to maybe push that fair value or fill the fair value gap, you will not get stopped out, right? So, and at this point, we're going to be targeting the low of our CRT. Now, you will also notice that this CRT is going to help you a lot, because you will have been looking to buy from somewhere here, maybe looking that it's going to be in another block, right? But if you had in mind that this is a complete different setup that is happening, you will be free from this particular false signal here, right? So at this point, remember, higher time frame, price is reacting up from a key level on the higher time frame, and then we're expecting it to even come lower, clear these relative equal lows here and more, right? So at this point, we're expecting that sell, and then it happened exactly. We came back, and this was exactly London open. So exactly London open 8 a.m. Cameroon time. That was the best time that was the London open kill zone, right, for you to get your entry. And at that point, that was when we had our entry on Euro USD. Our target is the CRT low. And just like that, price went straight up down to taking the CRT low. All right, so I think this video is quite simple to understand, and if you need to first of all know how to identify your key levels, in fact, nothing to say much. This is well simplified, I believe so. If you have any more questions on this particular concept, CRT, you should leave them on the comment section so that I'll make another lesson to simplify them, right? So I wanted to make this video to be very short. If it is helpful, or if you find this video helpful, you can leave a like, leave a comment, share to your friends as well, so that it's going to help them as well. So thank you very much for your time, and thanks for watching up to the end. God bless you.